there will be fewer humans that need work to be done. They're putting sort of fancy workflows and stuff in place when like AI will just do this stuff.
When you see a stock all of a sudden continuing to descend, I bought against the momentum because the valuation became stupidly attractive.
It's like now a $4 billion company from being, getting close to like a $10 billion company at one point.
Strong company performance does not necessarily mean a good buy. Why would that be? Because we all know, or should continue to reflect on the fact that the market does not care about what happened yesterday.
For an advertising-free version of this show, check out wallstreetwildlife.com. Welcome to the Deep Investing Jungle with your hosts Luke the Badger Hallard and Christoph the Monkey. This week, is software eating the world or is AI eating software? We're taking a look at Monday.com's results. Plus, Christoph tells me Greg's sausage rolls are in trouble. Am I going to double down, do nothing, or come to my senses? We're going to field a Patreon question on why Christoph bought Oddity Tech, ticker ODD, plus some chat about Tesla's pivot from cars to robots.
Badge, you are slightly less hungover than promised. What happened last night during Super Bowl Sunday? Did you rein it in or?
Pretty wild. We rang the bell in bar a couple of times, drinking like shot skis and had some fun. So I'm not a massive, I had someone explaining how Super Bowl actually works to me. So I was trying to piece together the mechanics of the game. But the halftime show was superb and it was a fun day out.
Oh my God, I love that halftime show. That was fantastic. That was some real creative. Yeah, that's art. That was art. Even if you take politics out of it, to imagine all of that beautiful.
I'd heard of Bad Bunny, but I'd never really seen or listened to his music. And then one of the girls was playing some of the songs over breakfast. And that managed my expectations because I was like, this is crap. Who the hell? The guy can't sing. But the show was superb. Yeah, agree. It was a really fun story, and it was a great show. Yeah.
I was kind of eyeing the game half in, half out. I was doing work on the laptop, trying to keep the pulse on American culture and what the ads were telling us. I caught a couple that I thought were what's going on here? But you were watching, I think, more intently. Did anything catch your eye in terms of were there some obvious winners, losers thing?
We have a bet every year. We pick a brand, and then whoever's advert comes up first, wins that prop bet. So we just betting throughout the day. I bet on Anthropic because I knew they had a bunch of Super Bowl ads. But some rando insurance company got in there before me. But I thought the Anthropic ads were good. They're interesting. It's kind of attack ads on OpenAI, talking about them putting adverts into AI.
That was Claude, right? That was the Claude ad with the buff dude. Yeah, that was cool.
I didn't catch it, but I saw on Twitter this morning, there's some controversy about Ring cameras and their advert around. Did you catch that one? So Amazon owns Ring, which is the cameras a lot of folks have on their front doors. And the pitch of the advert was if you've lost your dog, we've been helping people find dogs by putting photos on lampposts. It's time to modernize that. And they've now announced a feature where you can do a network search for your doggy, and then it'll activate everyone's camera in the neighborhood. And if the dog gets seen, you hear about it. So people are suddenly realizing, I've built this mesh surveillance network. You should have known that to start with when you put an internet enabled camera on your front of your house. And if you've got Ring cameras in your house, you might want to rethink that.
Oh, that's fascinating, because as soon as I saw the dog angle, I'm like, oh, that's great. Nothing more heartbreaking than seeing a lost buddy wandering through the neighborhood. I did not.
Well, wait until ICE start taking a surveillance feed from this camera network, right?
Correct me if I'm wrong. This is a little stereotypical. I've never been to China myself, but people who have, I hear that is the sort of Black Mirror type of situation where there's a camera kind of everywhere, and that surveillance state is, I don't know how I would drive. I don't know how fun driving would become if I knew that every last, portion of the highway was recording me and managing speed. Like that would suck.
Well, I mean, you're being recorded everywhere, right? Even if only by your Tesla and like Teslas that pass you by in the street. The data's there. I'm sure it's going to be used, or it is being used in nefarious ways.
Yeah. I caught a glimpse of the Coinbase ad, something that was like a bunch of text, like blue screen and basic text. And I thought, oh, this is very analog. Something about crypto is for everybody. And it was a play on words about bodies. In a sense, trying to further democratize crypto and get it out to the masses. I thought it was a clever ad. Beer commercials, the typical. Other than that, I don't know. I didn't study it enough. I was hoping you could give me.
I could tell you about the beer I was drinking.
Yeah, okay.
That was my focus.
All right. So you want to talk stocks and investing?
Yeah, let's do that. That's why.
Yeah, let's start with the abstract layer and whittle ourselves down to the more concrete. I came across a tweet by my man Zach Rynes, known as Chainlink God. I follow everything he says for obvious reasons, for friends of the Wall Street Wildlife podcast. If you don't follow him, by the way, and you own Chainlink, it's an absolute must. I find him trustworthy analyst in terms of trying to call out BS and helping to shift the narrative around what crypto used to be, or, all the circus stuff versus the directionally correct functional uses of it. His post, I'll read a good portion of it. I think it's worthwhile. He says, most people are naturally biased toward thinking exclusively in linear terms, and for good reason. Linear thinking works for most things in life, reinforcing this perception. But I do believe we are on the cusp of exponential economic growth, and 99% of people are not prepared for this. Specifically, I predict the rise of apex companies driven by AI, crypto, and robotics. Manually lean and ruthlessly automated at every level with near zero human overhead or friction and unimaginable margins. So, 3 categories, and this is the confluence. AI, he's calling an infinitely scalable swarm of autonomous, self-improving knowledge workers, rapidly optimizing every process with superhuman precision and speed. We've been witnessing that ourselves, right, Badge? Crypto, he's calling this is a great definition. Crypto equals elimination of counterparty risk through a trustless financial layer, automated business logic execution, and cryptographic verification. That's in part the Chainlink thesis. And then robotics stacked on top of that equals fully autonomous logistics, manufacturing, construction, and transportation via swarm of self-repairable and replicable bots. And then, of course, there will be winners and losers, but there's a chart showing linear graph switching over to exponential graph, basically going perpendicular across the axes, right?
Yeah, it's a take on that wait but why graphic of you are here with AI as the curve goes up. And we're like, oh, cute, dumb monkey, dumb monkey AI that can barely do anything. And then just past the stick figure, the chart goes exponential. And suddenly you've got godlike super intelligence just around the corner.
Right. And this is what it feels like. I mean, I think to me, it feels like I'm already last month, certainly, that the curve, right? I could feel the acceleration, basically. This next chart shows an overlay of the growth curve over 25-year span from electricity, the internet, radio, cell phone usage, and smartphones compared to the line of artificial intelligence. And here what you could see is that all those transformational technologies had a gentle-ish slope. Electricity is kind of fascinating. Over 25 years, it kind of took its time accelerating, which is kind of wild. Internet had a gentle slope and then got pretty steep later on. But when you look at the AI slope, it's near 90 degrees vertical right from the start. especially in comparison to the others.
In defense of this chart, though, right? What the New York Times should have done, if you put like a logarithmic x-axis, AI is newer and it's going through its growth so much faster. Electricity, was a long time ago. And so what this chart is saying essentially is like everything we invent now is like ramping to success or failure much, much faster than in the past. And that will only get faster and faster and faster.
That's right. And so this is what I had in mind when I was thinking about Monday.com, an old favorite of mine. I used to have a huge position in Monday. So at least some years ago, I knew this company inside and out.
Like we both owned Monday. And we used to use Monday. Like I consider myself, at least like a year and a half ago, I was like a Monday power user. I built all sorts of like automations in it. So I feel like I know the product.
It's a lovely product. But here's Monkey's pontification. We knew earnings were coming out this morning. The valuation has been getting better and better as one of the cheapest SaaS companies. And, we fielded questions quite often, is this a good buy? Because it's such an outlier in terms of cheapness. And I personally wasn't seduced by that because I thought, well, cheap for a reason. What's that reason? So today, as of right now, it's down 21% after earnings. Here's the wild thing. And so, first of all, so let's look at this graphic. Here's the fascinating thing. You see two lines that I made with our friends over at Fiscal AI. One is the revenue line is increasing very steadily up and to the right. You would think the stock price would follow, correct? However, stock price basically is now touching or has touched the all-time low as of today at 77 something a share.
Yeah, and it's like now a $4 billion company from being, getting close to like a $10 billion company at one point.
Right. And so there's a lesson here for me is that there's many. One, cheap does not make a good buy necessarily. Strong company performance does not necessarily mean a good buy. Why would that be? Because we all know or should continue to reflect on the fact that the market does not care about what happened yesterday. It's only thinking about future cash flows. And so I didn't study the earnings in depth. I know they beat on revenue a little bit, but free cash flow, I believe, was revised a little bit downwards. So it's almost like the message we're getting is obviously to bring these charts together is that everyone in this industry knows a company like Monday.com is the most primed for disruption by AI, and that disruption, because of the exponential stuff, might happen way, way sooner than we think. Because again, we're not talking about linear speeds. We're talking about accelerated AI adoptions. And so I'll turn it over to you in a sec, Badge, but the only other nuance I would like to add here, especially in light of the SaaS apocalypse and so forth, is that to your point, I still remain ambivalent about cybersecurity SaaS companies because they have that existential risk component, and you're not just gonna rip out your SaaS and only to find out your company was destroyed overnight. However, with a company like Monday, Monkey is actually playing with his crayons this morning, looking at the charts and side note, the tools that I taught at my Options University cohort number 2. That is exactly what I'm using this morning, was using before we started recording, to figure out, is this still a short from these all-time lows? And big picture, Badge, this feels to me like a Kodak moment. Kodak is one of those, tales of cautionary tales, right? All of a sudden, digital cameras show up. They don't immediately get rid of film, but the writing was on the wall and the market responded with forward thinking. I don't think Monday is long for this world as an investment.
Great. I'm glad you went that way. When you started talking about like crayons and charts, I thought you were going to say, oh, there's like a turnaround coming. I'm totally with you. This company, unfortunately, is doomed. Yeah, like if you don't know what Monday does, it's like workflow automation. So it's like, we used to use it for the podcast. So we'd have like a bunch of topics. They would be like, entries in like the Monday dashboard. And then we could add like images and chit chat about things. And we could, give ourselves like reminders and tasks to go and research stuff. And then like pull them together into an episode. But companies use it to run their business. And actually, I misspoke earlier. They were previously a $15 billion company, now down to a $4 billion company. And that's because like they were doing in their early days, I think they were controversial because they did like a Super Bowl advert like a couple of years ago, but they were doing like doubling revenue every year, more than 100% revenue growth. And now revenue growth is down to like 26% annually. Like growth has fallen off a cliff. You've sort of quoted me. I don't know if you saw my tweet. Like, the writing is on the wall for this one. Unfortunately, it's a great product, but they're in the wrong place at the wrong time, and they're automating the work of humans. There will be fewer humans that need work to be done, and they're like, they're putting sort of fancy workflows and stuff in place when, like, AI will just do this stuff. You don't need to build workflows in Monday. You'll just tell your corporate version of Beaver, like, go get this done, remind me in 2 days' time to do this, go figure this thing out and solve this problem. And like these tools are doing this stuff for us today. This is real. And, we're only spending like, $10 a day on AI. If you're a company that's got, hundreds of thousands of dollars spend every day, imagine the stuff you're achieving with these tools.
Right. You know what I feel sad about? Two things, actually. One, the makers of a company like Monday, it's a fabulous product, it's a fabulous company, and all of a sudden, the world changes and it's dead. I mean, I'm sure they made lots of money in the interim, but it's a little sad to me, humans being obviously replaced. Two, who else I feel sad for? There's going to be a lot of, I think, long-term investors with that anchoring bias and with the that will make the mistake, classic value trap mistake. Oh, but the numbers are still so strong, and it's growing, and it's the cheapest it's ever been, and this is in part why the charts at least help me get a little bit more objective. Like, even if I love this company, the charts force me brutally almost to say, but what's the data saying? And that's what I would urge everybody to, maybe not just for Monday's case, but there's other examples of this kind of stuff happening where there's a divorce between what you think and what's actually happening.
Yeah. Our friends over at the Shooting the Bull podcast, Drowsy and Bear, I think they still both own Monday. Like, guys, the writing's on the wall with this one. Wake up. Your friends at Wall Street Wildlife are telling you to get up.
Bear, my man. Bear, I love Bear. Bear and I go way back to Saul's boards. Yeah. He's a good man. He's thorough, but...
Well, Bear says in his tweet just 3 hours ago, I'm so triggered right now, lol, still holding #stubborn. So there you go, Bear. You got to get off that pot.
Yeah. There's other honey. There's honey elsewhere, Bear. Your pal monkey. Or switch over to bananas. Plenty of other bananas.
Right.
Oh, man.
You're right. Your comment is interesting, though, because that is right. Like that, even the greatest investors among us, if you're sitting on like losses, you get like anchored. And you end up in these like just destructive mindsets of, I'm just going to start doing some weird stuff to try and get even. I just want to get my money back. Or this company, you've followed it and you've put so much time and passion into researching it. Like you find it very hard to put it aside. But, you got to move on when a business model is truly broken.
Absolutely. Not easy to do, but the numbers, I mean, that's why if you go back to the chart I posted, I mean, it's kind of staggering. Revenue is like a rocket ship up and to the right, and the stock price is down and to the right. So that's a bad situation.
Yeah. I love to say in this situation, like what goes down can still go lower, right? The floor for this stuff, the floor is zero. Literally, the company is insolvent. And then it goes insolvent and it suddenly shoots to the moon because Reddit like go crazy about it. That's not investing. That's just circus antics.
Yeah, for better or worse, right? For better or worse. Too bad.
All
Too
right.
bad.
Yeah. Should we talk about a company that is not, that is shooting to the moon and in every way, like Tesla? When they merge with SpaceX and OpenAI, they're going to, like Musk will finally have his, his X like super company. So not going to go deep on this one, but we did catch the earnings call last week. And I thought it was quite interesting that they're now demising manufacturing of the Model S and the Model X at their Fremont factory. And they're now pivoting that manufacturing fully over to Optimus, their robot.
Yes, right. Yeah, the super company is what were the pieces? Sorry to backtrack. It's SpaceX acquired XAI, right? So
Yeah, not sure who acquired who, but they've merged now.
Right.
Well, they're in the process of finalizing that. That's happening.
Yeah, I mean, well,
and then I think SpaceX is, so then that combined company is rumored to be IPOing middle of this year, which is great for me. Hopefully I'm a SpaceX shareholder. And then there's talk that maybe those things all merge with Tesla. Like there might be some shenanigans going on here with like Musk's incentive awards. Like I'm assuming, perhaps naively, that those will be adjusted for the combined entity.
Right. I mean, that's nuts. But that kind of company could have a path pretty clearly to be the world's most valuable by maybe even by a long shot. And I know this is common fodder, but that itself is impressive. But when you also have a madman like Musk in charge of it all, who's ruthless in every dimension, including knowing how to execute on the most difficult engineering tasks, it is a monster in the making. I would buy shares. It would be fun to join you as a SpaceX owner too.
Totally, yeah, agree. Yeah, like if I do vest into being a owner of public SpaceX, I don't plan to sell. Like that'll be a nice, pretty chunky position in my portfolio if it goes public at like a $1.5 trillion valuation. But like, yeah, I'm in for the long haul. I said way back, like I thought that SpaceX was going to be the world's first $10 trillion company. And, maybe they won't be, maybe like NVDA or someone will get there first, but like they're certainly going to be one of the world's biggest companies.
Yeah, that's an easy path for sure. But about the demise of S and X, probably time, obviously. Those vehicles had their day, but it's also interesting. You could see the evolution of the master plan. That was never about the cars. The cars were always a stepping stone. Start with the Roadster, then the S to the 3. Now they're phasing that out. But yeah, now the cars are being replaced by the robots. So I don't think Tesla ever gets rid of all the cars, obviously. Right, obviously. But the robotaxis will be the main thing. And then some Model 3s. But eventually, probably the Model 3s will be, the ones. So anyway, Tesla is not a car company. I mean, God, that's not anything new.
Well, anyway, they've got a goal of producing 1 million Optimus units annually. Like that's obviously many years away. There's still like a whole bunch of engineering and software challenges to solve. But they're on track. Like, I don't know if I said this so on the pod, but I certainly said it to you privately. Like I was ranting about, Musk, they're making a mistake and they're sort of clinging to this idea that they don't use LiDAR in their cars and they're just going to do it with vision. And my position was like, that's dumb. The cost of LiDAR has fallen through the floor. It's like a few $100 to add it to a vehicle. Why not have just extra data, which means extra safety? But I had last month I had a Model 3 with like hardware for an FSD in the mountains, and like, holy Christ, this thing was so capable. Like, drove me from like a city, downtown, highways, icy, like poor visibility mountain roads, and it did like a 2-hour drive. I didn't touch anything. I just kind of sat there and gawped how competent it was. So yeah, like, it's real. They've fixed it. They solved FSD.
They did it. I'm mad at Tesla because I have the 18 and 21 Model 3, so hardware 3, and the retrofit that they promised it's not a simple retrofit. And, you know, obviously there's nary a peep from the Tesla folks when Monkey could get his hardware 4. But even on 3, I've you know, I experienced the same thing. So I can't imagine how much better the, you know, version 4 was.
Would you, so let's say you upgraded your car, and I think there is talk about them grandfathering in owners of certain vehicles.
Oh yeah,
so
that's a given. That's not talk. That's been official. Just no talk about when Monkey gets to schedule the operation.
Right. So would you? So let's say you didn't own FSD though. Would you pay $100 a month for that capability?
Probably at the point where I could legitimately relax in say the passenger seat or the driver's seat and like look at my phone kind of situation. Before that, I still like driving. Like, I enjoy driving, so for, you know, highway trips, autopilot is good enough, you know, like that's not worth $100. But if all of a sudden all the commute time could be spent legitimately relaxing, that's a whole nother ballgame. A train, right? Like that's why we love going on trains, because you get to just exist. Yeah, that's worth $100 for sure.
For sure, yeah. Like, it's revolutionary. I buy one for my parents, and then, you know, that's it. They don't have to book taxis to go out to restaurants and stuff.
That's such an obvious use case. The elderly get to be mobile again. No worries about eyesight issues. Yeah, that's fantastic.
Just in case he's listening to it, my dad is a very good driver and still driving and loves his car. But yeah.
Badge. Do we want to talk about Patreon question that Monkey got? So our main tiger, Bengal tiger, over on Patreon, which is patreon.com/Wall Street Wildlife, asked the following about the company Oddity, ticker ODD. Question for Monkey. Using your framework, buy with momentum because the market usually knows more than you, or buy if you know more than the market. Assuming, maybe incorrectly, you're not an expert on beauty and wellness products. The assumptions we make. Monkey is a beauty expert because he's... Anyway, I'm looking at this chart wondering why you bought ODD when you did. Can you elucidate? And so what his chart shows is a chart sloping down and to the right, meaning going the rough direction. So in one sense, I violated a very basic rule, which is trade with momentum. And as of now, I was wrong. I'm down, whatever. I bought it 36. It's around 30. So one, let me acknowledge the error. But why did I do it? It's about the process, right? And so this is a little crude, but I drew in some basic support and resistance levels. And what you could see is that at the point where I bought, marked by the little banana signal, Oddity had reached support level from way back. I'm sorry, not way back, but from way before the major uptick. The chart for you non-visual YouTubers is kind of similar to PayPal. There's a flat, then there's a major up mountain, and then there's a descent from the mountain. And so in one sense, here's the lesson. You draw the levels to get a sense of supply and demand. And as the levels descend, those support levels, in a sense, can become stronger. And so Monkey waited to make his purchase until the levels got 3 deep. And then at the time I bought, there was what looked like a low reversal. So I thought that could have legitimately been the low based on market memory. However, of course, it reversed and then went further down to the next level, which is still pretty strong. What I want to communicate, there's another piece to this, but what I want to communicate is these things are not magic. There's nothing that's 100% certain, but I had a very clear sense of good entry points. And I made my first purchase at a fundamentally solid support level. So I thought. 2, I only bought 1 share, which means nothing out of context, but to me, it was a small nibble entry position, in part because I knew I was going against momentum. So until you have the reverse of momentum, I wasn't going to go in big. But I did want to get my foot in the door. But that's huge. That's different than had I gone in with a 10% position. But 3, stacked on top of all of that, there's a great chart. So this is what's interesting is this is a chart you see often if you study SaaS companies that shows the rate of growth, which is the horizontal axis. And on the vertical axis, you see the EV per sales ratio. And you basically get a good sense of which companies are growing the fastest and are cheap. So basically the bottom right quadrant is where the value stuff is, right? Now, Oddity does sell beauty products, but they also have this AI lab that helps people configure skin tones and get their, like a more professional data-based, figure out exactly what product you need versus the woman at the store telling you. Anyway, that's anyway.
Hang on. I'd forgotten that Oddity was the beauty company. What the hell is it doing on a SaaS company's dashboard?
No, that's the point. No, that's the point. That's the point. This doesn't belong on the SaaS. Okay. It's not a SaaS company. It has a little bit of AI modeling, right? But no, it's not a SaaS company. But what made this chart fascinating was this user, Sergey CYW, said if Oddity was a SaaS company, what you would see is in that bottom right quadrant that's highlighted, you see that it's growing close to 30% a year, and its PS ratio, I think, is about 2 or 3, which means that it would be completely a complete outlier in terms of the comparison of rate of growth plus how cheap it is. Now, I see your expression, right? But here's the thing, Badge, beauty products, especially on a subscription, because these guys sell subscriptions, are repeatable. Once you get a person buying beauty products, they tend to stay with that company. Forget that. You're about to like explode. Your facial expressions are about to explode. But I'll let you have a shot at this. But that's not the point. I'm not saying this is a SaaS company. What I'm saying is, to return to my main thesis, is when you see a stock all of a sudden continuing to descend, I bought against the momentum because the valuation became stupidly attractive. And I marry the two, and now I have a good entry point, and I have ways to DCA once I see the reversals take place. Go ahead, because you're about to explode.
You just laugh my head off. It's such garbage analysis by this Sergey guy. Like, I've got no problem with your investment in Oddity. It's not for me. Like, that field sector doesn't interest me in any way. But this guy is just smoking something funky, right? If he's talking about this like it's a SaaS company and saying, oh, look at the growth versus the valuation. I know the SaaS apocalypse has happened and all these companies are now like in struggling. But if we wind the clock back, say, 18 months pre like this massive AI boom, SaaS companies were valued like that because like the marginal cost of selling another license is almost zero, right? Land and expand, it's software. makeup ain't software. You got to manufacture makeup, right? You want to sell like another, I don't know, whatever, like lip filler or something, whatever the hell the thing is. You have to manufacture that. It's a physical thing. It's not SaaS. So your margins, it's completely different to software.
Yeah. That's not the point.
I'm not critiquing you. I'm critiquing Sergey CYW.
You should critique me in the sense that I thought this chart was useful enough, because even though it's apples to oranges, what this chart really shows me very clearly is that this is a company that's growing very quickly, and it's selling for a ridiculously low multiple. 2 or 3 forward sales because I know the company, it has a 4th brand that it's about to announce that's going to add to the revenue pile. And so all I was trying to say is the valuation was stupid cheap. The support levels now are being breached, and we're basically at the close to the lowest dungeon floor. And so to Bengal's question is, yeah, I made it. It's a mistake in hindsight because the price continued going lower, but I had a justifiable reason to enter against the trend, hoping to quote unquote catch the bottom. I didn't. It went lower. Sure. But now I have even more, once it turns, I'm ready to act with more decisiveness and to increase the position, because I have these kind of 3 layers stacked on top of each other that give me a pretty accurate view that it's going to be soon time to go bigger.
I think that's fair. And like you as you said, like in your options course that you delivered yesterday, like you gave us a bit of a masterclass very quickly in technical analysis. And like, I don't use that, and I don't ever plan to use that. But I think you have persuaded me that it's more than just like magic and mumbo jumbo. And so, the way you use tools like TradingView and the way you're going to teach our Patreon community to use those too, that can be additive to like a fundamental understanding of a company.
Right. And thanks for saying that, Badge. For our listeners, especially on the beginning side, here's how I would frame all this. At first, it might be overwhelming to even move beyond, I like a company or I don't. Okay? That's fine. But when you get more serious about investing as a way to make money, or as a skill set, or graduating from dabbler to hobbyist to eventually higher levels of proficiency, these tools, the ability to draw, say, a straight line to see where supply meets demand, it's not complicated. It's objective, and it really helps give structure to your narrative idea. And when you could use both on top of something like a fiscal AI chart you make by combining revenue growth with price, and or this SaaS chart that gives you a relative view of where companies are next to each other, then all of a sudden you're moving beyond hope. Like, I hope Oddity goes up because I like, the products it makes. Which, by the way, since we have it up with this SaaS companies chart, I haven't looked at one of these in a little while, but it is interesting. Notice Monday is on here, and it's also one of the, cheapest. And it's the only competitor, if in this world where Oddity was a SaaS company, the closest two competitors in terms of cheapness and for rate of growth are, curiously, Duolingo and Rubrik. So cheap for a reason. Again, we return to that.
That's right. Well, companies end up on the sort of the bottom side of this chart for lots of reasons, but one of them is like the business model is broken and they're cheap, as you say, cheap for a reason, because they're doomed. And it's like the skill and the art of an investor is to identify, like the blobs on this chart that are going to be future growth giants, and they're just like they're in a depression, versus the ones that are truly doomed and like on a irrecoverable path.
By the way, flashing news, Badge. Red alert. While we were taping, Monkey's limit order to short Monday using near-term put hit, and he's currently up a cool 6%.
What, in second? In
Yeah,
minutes? Like you're up 6%.
yeah. So I'm officially a Monday bear. Sorry, bear. Oh no!
Yeah.
Oh no! Monkey is bearish on Bear's love child. Ooh, them's fighting words. Maybe we got to have those fellas on the show. That would make a great episode. We got to. We should do that.
I don't know them personally, but we do, like, we swap messages from time to time. And I think I said to Bear a few months ago, like, I'm enjoying listening to their pod. It's very good. We do recommend it. Like, we'll put a link in our own show notes. I said, like, listening to he and Drowsy, it's like listening to like a more sensible version of Christoph. Like, you guys kind of talk about the same things and believe in the same things, but you guys are a bit more grounded in some of your wild thinking, whereas my, like, neighborhood monkey can go, like, way off the deep end with some of his theses. Sometimes.
You know what? Let me pull back the curtain a little bit. I don't think Bear will mind me saying this. During the early stages of the EOS monkeys fascination, where the company really was in trouble, Bear and I had a conversation, and he was, in hindsight, wisely saying, "Are you out of your mind?" And Monkey lost, half his dungaroos in that moment. Luckily, he made it all back. But yeah. Anyway, great beasties, those two.
Well, it's probably time in the show now for you to, like, launch the attack on me, because I think you got some comments about Greg's sausage rolls, haven't you?
Thank you. I did no deep research on this badge, but rumor has it that Greg Sausages alerted investors that they are seeing a direct impact on the weight loss drugs, that fewer people, I suppose, are now going to be eating their sausages because of the correlation with those GLP-1s. And so the question to Badge, as I highlighted at the top of the show, is, let's test your stubbornness. Are you sure? We know you're ethically and morally completely wrong on this one, so that's a given. But given the new data coming in, right, are you going to double down and say, no, Greg's or die? Are you going to maybe rethink and try to, do a little more research and consider it? Or are you going to be sensible and say, no, the writing's on the wall, you're out?
I've got to own something in, like, the boring dividend-paying stock world. I want to own more stuff like that. And I'm finding it so hard to get motivated by owning anything. I don't want to own, like, industrials. I don't want to own banks. It's hard to find stuff that's not, like, tech and growth and exciting and, like, sci-fi and the stuff that really kind of turns me on as an investor. I'm not particularly passionate about Greg's, but, like, I think it's a solid company. I'm standing by my thesis. I've got to own something in that space. I hadn't really thought about GLP-1s and Greg's. I do know that they've been pivoting their menu to slightly more healthy options. I think they had some campaign like a year ago, eggs at Greg's, so stuff like that. So they are, and the fact that they're talking about it on earnings calls, like, they're aware of it. They have got a bit of a history of, like, excuse making. They blamed the weather for, like, poor growth last year, and, like, guys, like, put that shit aside, just focus on the business, stop trying to make excuses. But yeah, like, it's a tiny allocation. It's fun, if only, to have it in the portfolio, because it gives you something to, like, bark at.
Right. At this point, right, the main value of Greg's is the entertainment value. 2, can you ever imagine walking into Greg's to order a salad? Would you like a salad with your sludge sausage, sir? Oh my God.
You're right. It's off brand. Yeah. Okay. Yeah.
Okay, so verdict is in. Badger is going to double down and become twice as stubborn. No selling of Greg's sausage. The show stays alive. We retain our viewers who tune in every week for the regular sausage.
Like, if you're listening and if you've got a good dividend growth idea for me, and I have been chatting to our friends at the Dividend Growth podcast, Derek and Edgy, and, like, I'm trying to source ideas from them too. I'm just like, I bought Brookfield Renewable like a month or two ago. I'm kind of liking that. Like, that's interesting. That excites me. I'm liking what I'm hearing on the earnings call I'm listened to most recently. It's a great dividend payer. If you can think of a company you think I've overlooked that isn't going to bore me to tears and isn't like a Greg's and is going to pay like a healthy, like I'm looking here for like, directionally at least a 3.5% dividend, then like message us on YouTube or on the Patreon and let me know, because I'm trying to find stuff like that for my portfolio.
If Edgy can't tell us, then who can? I am curious why you resist Nintendo. Maybe that's for another day. Maybe you haven't done the deep dive. Maybe you haven't listened to Monkey at all when he, which wouldn't be the first time, but that's my recommendation. Badge. So in other news, what has our very own beloved Beaver been up to? What happened? We leave him alone for a few hours, and what is it that we come back?
Yeah, like he's, as you say, right, he's messaging us. Every morning we wake up to like a couple of things he's been working on. He thought it'd be useful to add a Safari stock to this week's episode. So he's done his own research and he's suggested a company called Celestica, ticker CLS. Mm-hmm. I read a tiny bit about this, but I'm just going to pick out a few things from Beaver's thesis. He's telling us it's a behind the scenes company that is like the muscle powering AI data centers. And they build Ethernet switches, custom server platforms, and networking hardware that makes AI actually work.
So like an Astera Labs.
I guess so. Yep. And he shared some of the numbers. Market cap around $34 billion. I think it's actually a Canadian company, but there's like a listing on the NYSE as well, New York Stock Exchange. So 34 billion US. Revenue, 2025 revenue of $12.5 billion, up 28% year over year, with guidance for this year for $16 billion. That'll be like sort of mid 30s growth. So that's like mid 30% growth is decent for a hardware company. It doesn't belong on like your SaaS dashboards. Beaver likes it. I'm not sure personally. And like in Beaver's defense, he was running on Claude Opus 4.5 and we burned through like $200 of your Claude credits in about 6 days. So we can't afford to run him on Claude. So we've like followed the pack and he's now running on Kimi K2.5, which is like, I think it's like an open source Chinese model, and we're running it on OpenRouter, and he's now costing us like a couple of dollars a day.
If this isn't a beggar bowl segment, Taylor beggar bowl segment for us, if our patrons want more optimized Beaver, then you gotta upgrade those subscriptions so we could pay Beaver, our first employee, a little more, so that he gives us some more sophisticated analysis. But this isn't really about the stock pick per se. It's more that all of a sudden, we get to wake up and say, we have a new company to look at. This is what the AI is thinking, and we could put our own lens to it. And it's actually, I don't want to say comprehensive, but the format, I mean, it's interesting enough to then start digging in further, and it's fun too.
Yeah, totally. Yeah. We're always game for new ideas. And if you're a listener and you've got a stock you'd like us to take a look at, then like hit us up on wallstreetwildlife.com, which is our Patreon, or on the YouTube channel, or drop us a comment on Spotify. Like, we try and reply to everything.
Awesome. Badge. So this might be a good endpoint for our episode. I hope it's not being overbearing when I say that, having finished teaching the second cohort of the Options University, Monkey is trying to tie up some loose ends having to do with the legal entity and the liability stuff and fixing some remaining bugs. But I'm hoping to have that out into the wild maybe within a week or two, depending on how it goes. And having now taught it, I'm convinced that it's not just for options people, but there's so many sound investing principles woven throughout it about risk management and behavioral dynamics and using technical analysis. And I'm just extraordinarily proud. And I think the feedback we got was on the very enthusiastic end of the spectrum. So I can't. So what I told the last group was that I'm already committing to doing live Q&A sessions. I'll figure out my schedule, maybe on Fridays, maybe on Saturdays. I'll show up on whatever Zoom or whatever, call and field questions and help people learn how to use the tool. I invite everyone to when it goes live, to get on board.
Yeah, I think you've built like a really valuable product that's more than just like training. It's actually like simulators and tools and like journaling. There's a lot of strong like alpha generating investing behaviors that you're basically holding users' hands on, and then pairing that access to the tool with like your weekly surgeries, however you're going to sort of put that together. I think that could be incredibly valuable for investors to like up their skill set. I learned a lot sitting in like both cohorts. I may not use the technical analysis piece, but I'll certainly use like the more sophisticated use of options as like insurance and income generating assets. Like I've started to do that already now, thanks to what I've learned from you. So yeah, it's good stuff.
Awesome. Yeah, very excited. So all in all, what we have going on over on our Wall Street Wildlife, not just the university, but on our platform and our community is really coming to life. We have the next picks. We have the community portfolio going. The discussions are, we're at the point where our members are replying to one another. And so it's that inflection point, and we brought something beautiful to life. So check us out over on patreon.com, Wall Street Wildlife. If you are hearing this on the Spotifys or the YouTubes, make some friends, join the jungle.
Go check out, there's a couple of free posts on there, so you don't even have to become a member, just go and browse. Go check out Pinned Post, which is our King of the Jungle tracker. Like it's a new spreadsheet for tracking our King of the Jungle challenge that Beaver built, with a little bit of steer from me, but it's a really elegant way now of tracking and monitoring how the monkey portfolio is performing versus the badger portfolio versus the new community portfolio. And like I say it in full transparency, because like in the growth and tech like blow up, we're now, all three portfolios are now underperforming the S&P. Like that's just kind of the way of it. And that's like year to date. That's just kind of the way of it as a growth investor. Like you have your high times and you have your low times. But what we're doing at Wall Street Wildlife is just being transparent about the whole show. And I've said it before, but I sort of posted it on the Patreon recently, like the value of this community. I'm not predicting that we're going to go into like total like tech Armageddon and multi-year drawdowns, but we might be, maybe we will. And if we do, that is really where the value of this community is going to really show itself, because Christoph and I have invested through tough times before, and we're going to invest through, many, many tough times to come. And we're just going to try and show transparently how we manage volatility and manage ourselves when like times are tough. And hopefully that's helpful for any newer investor who's like, this is their first rodeo.
And of course, before we close, Badge, let's thank Fiscal AI, our essential stock research platform. We use it every day. We showed it during today's episode. It's our one-stop shop for stock research, offering up to 20 years of global financial data. It's just a fantastic tool. Use our link, fiscal.ai/wildlife, for 2 free weeks of Fiscal Pro. No credit card needed, and a 15% discount if you upgrade. Fiscal.ai/wildlife. Badge, you ready to become a beast of an investor?
I am, Christoph, and your journey starts here.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.